Hey, all, Sean Maloney, Digital Business Masters. Welcome to another overview call. The DBM strategy calls are every single Monday at 11 a.m. UTC. We've run these now for many, many months, and we do it for good reason because it's very, very clear where the world's headed in terms of fixing the money. Fix the money, you fix the world. You've got to start with yourself, and that's how it should be, frankly. People have been 100% reliant on bosses, banks, and governments for way too long, and look at where it's got us. It's a case of making sure that you change something in your life and then go and help other people in your family, community, etc., which is exactly what we've done at DBM over the past 15 years. Now, we have formalized that in an academy. We have an academy division as well to what we do as a company, and it's a case of making sure that we use all the outlets that we can muster, including a globally interconnected coaching team with hundreds of years of experience inside digital assets, etc. My job today is to pull everything together so that we can have a look at the big picture, which is what we spend quite a lot of time on. Because if you don't understand the big picture and the consequence of you being in the center of the money supply, you won't know or won't have the fortitude to be able to manage what it takes if you decide or have decided to participate in converting digital assets into a lifestyle. So part two is all about how we apply the big picture to real business every day and what we do to support each other and help each other and all the things that are necessary if you've got to be successful in what is a business model that's in isolation. Many of us work on our own laptops in our own environments, but on a globally connected way, which is the power of this digital age that we live in, which is fantastic. Our job is to guide that process, but we're not here to advise. Definitely not qualified to give financial advice. We don't want to give you financial advice. Those days are long gone. Okay, if you're still getting financial advice from advisors and pension planners and bank managers and bosses and governments, then you're going to carry on getting what you've got. You need to step away from that in some degree, take responsibility for yourself, and always seek financial education. Why? Well, as I say every week, and this is repeated every week for a good reason, because we have more and more people coming into our channels, obviously, especially through YouTube. So good to see you guys from the YouTube community. Just to repeat, it's a very important thing to understand that you don't simply convert your blood, sweat, and tears, your energy and effort, your skill into income and then directly buy liabilities with that income. That is not what you do. In case you haven't noticed. If you've been doing that for 30, 40, 50 years of your life, and you're here, then maybe you've realized by now it's not what you do. What you need to do is take the same activity, skill, effort, energy, apply it to whatever you're good at, whatever you want. Okay, there's a million and one things you can do these days to create income. That income invariably, still to this day, comes to you in the form of fiat currency. That's what I mean by income there. What you need to do is convert that devaluing fiat currency, which has been devaluing anywhere from 7 to 10% a year for most of your life. In other words, its purchasing power of a dollar, of a euro, of a yen, of a pound note has been falling in its purchasing power abilities between 7 and 10% a year for decades. They call it inflation, they call it price increases, they call it all sorts of things. The fact of the matter is that full fiat, which is what we've been in since 1971, cannot be called money because it doesn't do the fifth qualification of what money needs to do, which is to protect your purchasing power. It does all the other things. It's fungible, it's all exchangeable, all the rest of it, but it will not protect purchasing power. Fiat currency will not protect purchasing power. So you need to convert your currency into something that does protect your purchasing power. All right? And that is commonly known as assets, but not all assets are created equally. Because many, many, many assets, from property to business stock to annuities to bonds, they've all been engulfed by the fiat system. So what you need are neutral assets, assets that are independent of the full fiat system. And there's only two really to speak of. One is physical gold and the other is Bitcoin. The latter being the new kid on the block, but the latter in the form of Bitcoin being by far the most powerful, because its vol, its appreciation average over the past 15 years has been, depending where you look, anywhere from 70 to 150% per annum. Per annum. So what do? We simply take advantage of that equity, and we use it to fund liabilities. And if you're still here, or you move across with us into the second part of this call today, I'll show you a very clever calculator that demonstrates exactly how you can make a very good living on 0.1 Bitcoin. That's what we call the collateral planner. So if you're here for that, then you'll see it. If you're a Systems Plus subscriber, which many of you guys are here live, then you'll be able to see that in the forum. Download it today and get yourself started with what it takes to make a living from equity cash flow. To bolster that, it's all about the trifecta. You can't make a permanent living directly just off a balance sheet. All right. So building out an asset base and collateralizing that balance sheet is all well and good. And that's occasionally what you need to do in your business cycle. It's okay. That's normal in any business. Of course it is. But the fundamental that you really need to be driving is using your assets in the way I've just described to then leverage into cash flow itself, okay, otherwise known as yield. And that's a quest that we're permanently on at DBM. We're permanently on that because we understand full well that you need to build critical mass. You need to allocate a proportion of that critical mass, your balance sheet, across to your profit and loss account. And you need to learn how to manage that come hell or high water. Just like you would managing a supply base, managing an employee base, managing a machine base, managing a materials base, managing whatever form of base your business is made up of. And all businesses are made up of multiple bases. Your job is to manage all of them, or as many of you decided to put into your business. Obviously, the bigger the base, the more base you have, the more powerful your company becomes. If you've got a small base or not very much going on, then your business is less powerful. It is what it is. One's going to take time. The other one's going to be faster, but higher risk. So you've got to balance that. That's what we're constantly doing down here between our asset base and our cash flow instruments, let's call them. That creates, for the first time in human history, the ability for every man, woman on the planet to create an ownership of the world's reserve currency, otherwise known as US dollars. Do we hang around in there if the US dollar is depreciating its purchasing power at 7% a year? Of course we don't. But do we use it to take a breath before we go into assets that require stringent management and professional organization? Yes, we do take a breath with US dollar, and we come back out again and push on. Yeah. When you're good at this, you do that Friday through Friday. When you're starting out, you might do it quarter to quarter. It doesn't really matter. It's the same methodology. It's the same management. Your job is to get the mindset and the skills to be able to handle that management on your own. But get the support, of course, of people around you on the journey. This is very much an on your own process. This is you taking financial sovereignty, don't forget. So we have three churches on which we build that model. The first one is pure equity. Manifests itself as Bitcoin. We've said forever and ever and ever, just own one Bitcoin. Dollar cost average until you own one Bitcoin, no matter what. No matter what shiny objects are out there, no matter what you're told or what you're this and what you hear and what you're listening to, just dollar cost average Bitcoin. I'll show you why that's been such a powerful thing over the past decade in 1 second. We also, as I say, understand that you can't run a business just off a balance sheet. Occasionally, you are going to have to move your assets into form so that they create a yield. And we're constantly on this quest at DBM. We've done lots and lots of different things, and we continue to do so across 14 different industry sectors. And we manage them. They're not perfect. They never will be perfect. There's always something that you have to think about, something that's getting in your way. You just put support and push, support and push to create the yield that you need. And your diversification comes from the fact that if you're professional, you'll have fixed yourself in a point in time where you must achieve a certain yield. You must achieve a certain dollar value. If you've set your target to be $1,000 a month of positive yield, then you must achieve that every single month. You don't sit back because something's not gone quite right, or the project's done this, or something's not gone right there. You wish you'd done something different there, or somebody said this, somebody said. You make the decisions as to what you're going to do to recover wherever you've ended up. Too many people crying the cornflakes in this industry because the retail people who have never run businesses, they don't understand the cut and thrust of what it takes to set up a business and run a business, let alone be a success in business. So our job is to try and support that process we're trying to do today, which is why we have this type of mantra, which is, come on, help each other out. It's not always going to be easy. If it's not easy, work harder. When it's easy, work even harder again. It's easy to be a genius in easy times. It's hard to be a genius in hard times. You must work hard all times. The other area you may want to look at, which lots of people do, is the concept of equity plus yield. That manifests itself in an area of the industry called the altcoin sector, where we own alternative assets to Bitcoin. That's what alt means. And we know through hard experience and long experience that not all altcoins are created equally. And we do our best to identify where we can apply those alts to create a situation whereby we benefit from the equity as the alt appreciates. We've done that with Ethereum, for example, over many years, since $50 a coin. Yeah, Ethereum has its own challenges and been sideways for many, many months, and now is pumping back up again because of things that are being organized on that blockchain that create the yield. So we're using all sorts of platforms in the background where we stake our Ethereum just for the sake of the example, or our Solana, or our Cardano, or Ripple, all sorts of different altcoins. And we put them on platforms that want our liquidity. They're on custody with those platforms, but in return for that, we get a yield every single day, every single week, every single month, subject to how you've set it up. We also happen to work with the second most expensive crypto asset on the planet after Bitcoin that does exactly that. We're able to work with liquidity pools to create an ongoing income, daily income actually, of the underlying asset. And we're also able to deploy that asset into various technologies that create a yield. So, when you understand that, you understand just how powerful this industry is across these three churches if you choose to operate in all three, which would suggest that you do need to do, because it gives you the diversity necessary to hold your business together. Now, all that may come across, if it's the first time you've heard it, as relatively complex. Sounds like a lot of work, which it is. So don't be under any illusions. It takes a lot of mindset and a lot of skill to get yourself moving. So people who are starting out the process in the model of the DBM Academy start with skills. Obviously, yeah, you need to get the skills set up. A big part of that comes mindset as well. And then when you get more sophisticated, you're able to take that mindset and skill ability across to actual deployment. So all very well getting educated and getting your mindset right and getting skills, but if you don't deploy them, what's the point? It's all about realization, education, application. And the application is where we turn our assets into income, which is done starting with the systems level and then the management of those assets, the ongoing income aspect as you develop and keep moving and, continually manage what you've got, good, bad, or indifferent, then you need support for that. And that's why we work so much day to day with our income subscribers in the workspaces every day of the working week. Okay, and once you've got through that, then you'll start to worry about keeping your income, which is the wealth side of stuff, which is why we have, the taxation workshops and all the things you're going to have to understand if you get to the point where you've mastered income, which isn't that difficult to do if you've got the staying power for it. But what is really difficult is maintaining that income over time, which is otherwise called wealth. So we cover all the 5 areas at DBM Academy, and we've built a very strong team around us that allows us to do that with great success. So you're welcome to join us at whatever level you're at. So let's go into some of the macro and the political bedrocks that create the picture every single week that allow us to have the confidence to be able to not just be successful in our own right, but also help so many people around the world to also understand what it is to run a digital assets-based business. Very, very simple. this infographic says it all. We started back here somewhere when we had the mindset then, not really understanding what we know today, 10, 12, 15 years later, of, oh, Bitcoin, what is that? Interesting, but seems very expensive. Seems very expensive. $1,000 a Bitcoin seems very expensive. Then we got up to 2016, 17. Oh, $15,000. Oh, seems very expensive. Seems expensive, that Bitcoin. Not sure. Then we went through what we went through up to 2020. And then we hit the COVID period of time. Oh, Bitcoin, $50,000, $60,000, $70,000. Seems expensive. Seems very expensive, that Bitcoin. See the pattern? So what did we do all the way through that period? Yeah, everybody wishes they'd done more. Everybody wishes they'd held more. Everybody wishes they'd, had the nerve to manage more. But at the end of the day, you are where you are, and the point still stands. Oh, $105,000, $107,000 Bitcoin seems expensive. 10 years from now, or more probably 5 years from now, you'll look back on this recording one day and say, do you know what? I wish I'd have bought Bitcoin at 100,000. It's an interesting phenomenon. Let's put it that way. And that's putting it lightly. But the reason that what we're going to experience in the next 10 years compared to what we've done in the past 10 years is so much more powerful is because the institutions, the corporations, the investments, and I should add in here now the governments, and you'll see now, are absolutely 100% in FOMO. FOMO means fear of missing out. All right. And it's phenomenal to observe as a front runner, as a pioneer, as an idealist Bitcoin maxi OG, to be able to look at this and say, wow, for once in this life, as a normal individual, we've been able to get ahead. We're in front of, as opposed to what's been the case since 1971, permanently behind as governments and bosses and banks and institutions decide what's good or bad or indifferent for society. And most of that group of individuals, politicians, bankers, bosses, advisors, most of them still don't understand what I know and what you know now on this call. Think about that. If you're here live, as usual, you guys know it because you're here with us every single week live. If you're listening to this for the first time across whatever platform you're listening to this on, then congratulations. Welcome to the real world. Now we start to make a difference because up to 2036, 99% of the entire available possible supply of Bitcoin will have been mined. The other 1% will take another 100 years. We'll be long gone by then. But this next 10 years could be and should be the most extraordinary 10 years of your life if you're determined to do what many of us did 10 years ago. Hence, we're so passionate about what we do. Now, where does that confidence come from? Well, this is where, whether you like it or not, you need to get into the macro and you need to get into the political elements of what is now constructing and accelerating what it is that I've been talking about for the past 20 minutes, whether it be Bitcoin, whether it be altcoins, whether it be USDT stable coins. They're all combined together. Yeah. Max Kaiser said this week, actually, which is quite amusing if you think about it, the stable coin journey, which a lot of banks are on because they need this bridge, right? They're not prepared to go full on Bitcoin. They're stacking behind the scenes. Don't be under any illusions, but they're not prepared to give the general populace the idea that Bitcoin will be the next reserve currency. They're not prepared to do that. So what Matt Kaiser calls it is the USDT, the stable coin model, USDC, Circle, etc. That is the old people's home for fiat. It's the fiat old people's home. It's where people are going before they pop off the mortal coil, while everybody else who's got years ahead of them are out there in real life driving Bitcoin itself. Yeah. So just think about that. Doesn't really matter to us either way, because we're leveraging all three aspects: Bitcoin, altcoins, and stable coins, because that's how you do it. That's how you organize yourself Obviously, Bitcoin is the bedrock beneath everything because companies like BlackRock have been determined are now determined to become the fastest ever to break the $70 billion ETF threshold. That's 5x faster than the old record, by the way. Bear in mind, the ETFs that that BlackRock launched not too very long ago, less than a year ago, are brand new. They're brand new. But now it's just become the fastest, and there's other things coming behind the scenes that are going to be even faster. That's 5 times quicker than the old record of just over 1,600 days for gold to hit that 70 billion. That's Bitcoin all over, right? This is what we're saying. This is why we know. This is what we can see. Yeah. Then you've got all these other signals coming out as like Cooler there buys an additional 180 Bitcoin for 13 million. Okay, relatively small fry. But the reason that's an important update there is because you're getting these publicly traded companies copying what we call the strategy model. All right, so go and have a look at MicroStrategy, go and have a look at Master. If you're with us in the system subscription and the income subscription level, you'll hear us talk about how we're leveraging now yields from the likes of Master and Misty, which is a very interesting place to be, considering where we've come from, which has been pure DeFi. We're now straddling DeFi and TradFi. So that'll make sense for those of you who've worked with us over many years. Fortune 500 companies working on crypto project right in front of the gate now. There's nothing being hidden anymore. This represents one of the biggest wealth transfers we'll ever see in our lifetimes. We've already lived through the biggest wealth transfer we've ever had in our lifetimes. Now it's going to get even bigger. This is the whole point of understanding this intrinsic level of owning sound money. The equivalent of MicroStrategy in Europe, which is called a blockchain group, okay, have voted to sell stock. Just think about that. They're selling stock in traditional markets to raise funds to buy more Bitcoin. If you look at any of I think it's something like, it might be exactly wrong, but 30 to 40 publicly traded companies now already in only a few months have copied the strategy model in terms of selling stock to directly buy Bitcoin, and bar none, every single one of them has seen a stock price increase. Michael Saylor suggested this week that will be over 700 publicly traded companies by the end of 2026. 700. What do you think that's doing to the demand side pressure on Bitcoin? Why do you think we're so bullish about a $200,000 Bitcoin by the end of this calendar year, 2025? Yeah. Jordan Peterson had a very interesting interview with Mike Saylor just this last week. You'll catch it on YouTube or around the DBM channels. Jordan asked Saylor if Bitcoin is ramping up so exponentially, why won't Bitcoin just suck the investment capital out of everything? Michael Saylor very, very clearly, it is, and it will. That's why we're here. We've used some AI technology across the DBM channels to show you that in video form, having a bit of fun. All right, but that's it. That sums it up. And it's just so clear. It's just obvious. Yeah, that's why we're so bullish. $12 billion Bitcoin, Bitwise Chief Investment Officer, live on CNBC. Live on, mainstream news outlets. He said this on Thursday. Bitcoin about to explode to 200,000. Live on mainstream TV. And the thing that's interesting about just what the mainstream, by the way, is if you analyze the Google searches, it's still quite a low search. What you can do in Bitcoin, what we've done historically over the years with Bitcoin's rather erratic growth, has been to analyze the searches that people make on Google, for example. Back in the day, it's old-fashioned now, isn't it, searching on Google? Well, back in the day, you could see it. And as searches went up, you could always predict a price rise. As we sit today, there's very little searching going on, relatively speaking, by the retail, if searching is anything to go by. Right? But it won't be very long, because we're basically seeing 3 all-time highs just in this last 6 months with Bitcoin. We're just about to see another one imminently. We'll talk about that in a minute. You'll find is on the next all-time high, a lot of retail will come back in again. The retail people don't understand what they're doing. They'll tend to buy high, panic at the slightest whiff of a drop and sell, right? Obviously, that's not what you do. As you can tell by the prior chart, you keep moving. You never sell your assets. You learn how to use your assets to build critical mass. Interesting public company, a public gold mining company called Bluebird, European-based, I think, I do believe, announced that they will start buying Bitcoin. The tides have turned. It couldn't be better than that. It could not be better than that. Yeah, 2% of gold comes into the market every single year, no matter what, because that's what they're bringing out the ground. Yeah, obviously gold's had a big run this past few months because of the Trump effect and everything going on around the place. And we all saw that back in 2014. We all saw that back in 2011. We've seen it back in 2002. We've seen it back in 1993. We understand gold pumps, okay? But they're nothing compared to what you get with Bitcoin as a sound money, digital version of gold. So there's just no competition. The gold bugs out there either got gold to sell because they've got the vested interest, or they don't understand Bitcoin. It's normally a little bit of both. But it doesn't really matter. We stopped competing between gold and Bitcoin in our own private positions many, many years ago. It's a case of owning both. Own neutral assets. Finally, BlackRock announced the plans to become the world's largest crypto asset manager by 2030. And if they're increasing at 70 billion to the fastest ETF that's ever been created in just a few short months, then I wouldn't bet against them in terms of where they're headed now that they are 100% Bitcoin advocates. Okay, so the same formula applies. Money supply, M2 money supply up. We'll talk about that in more detail in a minute. Interest rates down. We'll talk about that in a minute. You've got the sovereign wealth funds, etc., becoming more and more normalized with Bitcoin as a bedrock. You've got over-the-counter and exchange reserves as ever dropping. This is out of date now, actually. It's dropped even more. This blue line is the availability of Bitcoin on the exchanges. Global demand, just page 1 of this update, has covered all that, equals price. Pretty easy to see where we're going. More validation on that. 2 pages these days because there's such a lot going on every single week. It's absolutely amazing to have the privilege to be able to sit and just digest this stuff as a Bitcoiner. So the whole idea is that Bitcoin treasury companies are now starting to buy Bitcoin. So this is slightly different than publicly traded companies. These are Bitcoin treasury companies. Strategy again would be the main one there. You've got other companies, Strike and Metaplanet and all these companies. So there's lots and lots of treasury companies that are being built, or companies that are being built on Bitcoin itself. All right. So the whole idea is as fiat inflates and people hold Bitcoin, then the yield exists in that. That's the whole point. So people are basically selling fiat, getting rid of fiat, moving it into sound money, and in there is the yield. That's the point they're trying to make there. Michael Saylor, like I said earlier, predicts 700 Bitcoin treasury companies. So a lot of public companies will move into that space, and it seems to be happening, dozens a week at the moment, and there's no sign of that ending. So that's good to see. Never thought we'd be seeing that, but we are because of the changes in regulation and legislation, mainly in the US and also in the Middle East. The treasury market is no longer a flight to safety or a quality asset, says Jeffrey Goodlash of Double Line. Okay, very interesting interview we did on Bloomberg last week. Quite a long interview, very technical interview. But what he's basically saying is that Bitcoin is rapidly demonetizing bonds. And that's something else we never thought we'd be saying out loud. All right, all he had to say at the end of everything was gold and Bitcoin are the place to be. And that's Jeffrey Goodlash, right? So the whole idea is to follow these people that we're not experts on. These are people we've never heard of necessarily before they became Bitcoin bullish, because you see them now come through the Bitcoin channels, obviously. But that was a pure Bloomberg play. That was a pure Bloomberg interview. Nothing to do with Bitcoin Twitter, nothing to do with Bitcoin conferences. That was a pure Bloomberg play. And more CNBC, more BBC, more Sky News. A lot of this now is becoming more and more available to the general public's ears, which is why we're picking more of it up every single day of the week. Okay, Stripe is another treasury company. Stripe is a payment portal. Stripe, I was getting mixed up with Stripe. Stripe is a payment portal. We use Stripe at the back end of what we do at DBM. And finally, it's looking like they're going to start moving into crypto provision through a company called Priv, which is fantastic. So we'll keep an eye on that. Either way, they've acquired it with $1.4 trillion, which is not a small amount. Adam Beck, our good friend Adam Beck, okay, of the he's backed the blockchain group. Keep an eye on that, especially if you're in Europe, raising 9.7 million to buy more Bitcoin. So that's something going on behind the scenes. You'll never hear it on public media, especially in Europe. But if you're keeping an eye on what Adam Beck talks about, then he gives you the inside track. So make sure you're following Adam on Twitter, X. Coinbase releases a new American Express card, only available in the US at the moment. Okay, I'll certainly come across to other parts of the world imminently, but they're just, again, using these methods to encourage retail. That's really all that really matters there. So earning 4% in Bitcoin on every single transaction, that's a sure sign that mainstream's on its way, which is probably the ultimate bullish maneuver. I think, as you guys will know, listening to this live, or specialists listening to this, that's been one of the big. It's ironic, basically, because the retail sector has been the community that's brought Bitcoin to where it is today. No question about that. In fact, there's been no choice. It's been enthusiasts and people who understand the need for sound money, right? Which we fall into the category of. Now you've got a lot of the big companies and governments and institutions moving in, including companies like American Express. And it's not that the retail's gone anywhere, it's just more muted, let's say, because you can't compete with the noise coming out of Coinbase, American Express, BlackRock, Stripe, Blockchain Group, Metaplanet, Strategy. You can't compete with that noise as a normal individual. But you've got a combination now of the original retail and the new institution, which was on the chart before, that chasm we've walked across. And then with the application of companies like American Express getting involved, you're just going to get more retail coming in. Now, these aren't going to be the same class of retail that we represent, because we represent the sovereign, we represent the drivers, the people who want to make a difference, have made a difference, and are going to carry on making a difference. Whereas the next crop of retail are going to be the same people who you have today, who will listen to financial advisors. They will end up in financial challenges because they listen to financial advisors, because they listen to the companies like American Express. Yeah, but that's okay. It's okay. Yeah, most people don't want the responsibility of sovereignty, of security, of making sure you manage assets, making sure you have the fortitude to maintain yield. Most people don't want that. If you talk bluntly about it, they just want to give the cash to banks and hope for the best, right? They want to go on 2 weeks holiday a year, they want to save up for Christmas, and they just want to live for the weekend, right? That's okay, bread and circus, no problem with that. Either way, these people are going to be embroiled and involved with Bitcoin, whether they know it or not. And that's the whole point. That's where sound money comes from on its next phase, and that's what we're ahead of, and that's why it's so exciting, including Shopify as well. Coinbase doing some very clever things, partnering with these retail giants. Now, certainly in the US, as I understand it, you can pay for goods and services through Bitcoin. Why on earth you would do that, I have no idea. But the average retail person would, because they don't understand asset management. And that's a whole different topic for another day. Misty, okay, I mentioned it earlier. And if you're in the Systems Hub, if you're working with us on the workspaces, you'll know we're doing a lot of work at the minute understanding Misty, MSTY, all right, which is a derivative of Master, which is the underlying principal stock of Strategy. Why we're so focused on this? Well, because we want yield. We want yield. Go all the way back to the beginning, as I was explaining about the two things you build on. One is equity, the other is yield. The ideal situation is you're permanently creating an asset base in your life that drives equity. And we'll show you where the equity comes from, front and center in Bitcoin, just in Bitcoin in 1 second. But living off equity isn't the way you do it. You convert a proportion of your asset allocation to yield. We're specialists at doing this at DBM. We've done it for years and years and years. It's not easy to do. Things move around all over the place, especially when you're working in DeFi. But now we've got an eye on TradFi, which is what Misty represents. Then we're creating a yield through our ownership of the derivative, which is basically a dividend that pays out quarterly. So the big news there, just on Friday, actually, they announced that a version of Misty is now available via the LSE. So if you're in the systems hub, if you're in the DBM hub and the systems forums, etc. at DBM, you'll understand how you can get access to that. Okay, this is something we're going to keep very, very insular because it's so new, and we want to be working with people who've got skin in the game and understand what it takes to work through it. So we're not going to be going from the rooftops with that. Amazon and Walmart reportedly considering launching stablecoins. Remember what I said earlier about stablecoins being the old people's home of fiat? That's Max Kaiser talking, right? Wall Street Journal reporting that Amazon and Walmart. So you can put Amazon and Walmart in the same category that you'd put the Bank of America or the NatWest or HSBC. They're not going to move aggressively across to sound money. It's not in their interest to do that. They will take their position in owning sound money behind the scenes, and they'll set up treasuries and they'll do all the things, and their stock market will fly, everything else. But in terms of retail interface, they're going to do it through stablecoins. It's okay. It's okay. Because what do we do behind the scenes? We do what they're doing with the underlying asset. We build our own balance sheets. Our balance sheets create the yield that allows us to go and buy off Amazon. You fund your liabilities. So all this is just trajectory. All this is just moving forwards. All right. Now to finish the macro, just before we touch on the political side, just before we wrap up, let's just have a deeper look at this M2 money supply, because we've now caught up from the end of what was March, sort of early April, okay, 70 odd days. And you can't hang your hat on this, but for a long time, we've been assessing the balance with some of the people we keep up with. Colin at Crypto, for example, over on Twitter and X, very good guy, understands what he's doing, very, very dry, straightforward. There's no BS. He just constantly adjusts the offset. He does it maybe every week at the moment. So to zoom in on that, because I know I talk about this every week, but the whole point of this is just to give you a validation of a sense check of where you're at in the cycles. So you're all the way back to the start of 2024 when we got wind of this, and we've just followed it through. Nothing really going on for the most of last year. Okay, people were, we were prepared for the long run as ever. You could take this chart back all the way back to 2017 and see the same thing. It's just, you're just prepared for the long run. And then what happens in November 2024? I mean, it's been like a shot of adrenaline. And it's completely changed the landscape, which is why I've been talking in this session today about understanding, as we'll show you in numbers in part 2 of this call, how to use your balance sheet based on Bitcoin to be able to create ongoing cash flows so that you can allocate to wherever you wish to allocate. Now, where does that come from? When we're the precipice here, so we're just about here right now, mid-June, okay? And it's tracking. Colin here has slightly adjusted this, but his percentages are coming in higher now, so it's like 72% probability. And if you've been tracking back here with him, you've been down at 58%, 62%. It's going up. The probabilities of match is going up as he tightens the days. So this 76-day offset from April, so we can precisely pinpoint where we're at today and just adjust it. Remember, M2 always runs about 12 weeks forward, but he's got his 76 days in line, right, which is important. Okay, there's a 68-day equivalent here, which is even tighter. Obviously, the tighter you get, the more difficult it gets, right? The point for us, though, is DCA is first of all, we don't really care about this because we're dollar cost averaging no matter what, right? But as we prepare for big runs, we couldn't have necessarily seen it on November because who knew which way that election was going to go? It was 50-50 more or less, wasn't it? So we weren't necessarily sat here in October going, all right, here we go. It's going to be a big run up to an all-time high for Bitcoin, which it was the first all-time high we saw because we didn't know which way the election was going to go. But what we've had since, in all this period since, okay, well, the M2's ebbed off a little bit and now it's pumped up. Remember, this happened 12 weeks ago. And we've seen a little bit of Bitcoin pull back from the euphoria as companies get involved and the whales get involved and they shake out all the weak hands and all that stuff's been going on. But ever since now, April, we've been riding up, riding up, riding up. That's great. But now what you've got to be looking for is what's happening between now and the end of September. That is a revelation because we've got such a lot of data now, along with M2, which to keep pumping and pumping and pumping to another era. Now, what do we do? Well, we know that we dollar cost average, but we also know now is the time strategically to look and deepen your penetration into Bitcoin ownership. Work harder. Do whatever it takes to grow your Bitcoin and make sure you do not sell your Bitcoin. Do not sell your Bitcoin. And I'll show you how we do that in a minute. All right. So that's when I know I talk about M2 every week, but that's really what this is doing for us. Okay. It's giving us these subjective signals as well as a hard signal based on M2. And you can see, I mean, if you've tracked this back all the way back to 2021, you'll see a similar type of thing going on. Right? It's not always perfect. It's not it's not a fixed science. But Colin does a great job of keeping an eye on us. So the whole thing is to be aware of that and use these times to operate in what's called a wealth transfer. Go and have a look at wealth transfer. Go and look at it on YouTube and figure out what wealth transfer is all about. Now, to wrap up this first part of the call, with that in mind, you've got to keep an eye on what's going on in the politics. Now, we've had some conversations with the community over the past few weeks about, I don't want to get embroiled with politics. It's too depressing. There's too much going on. Okay, if that's your mindset, then you've not prepared yourself for what it is to live in the center of the money supply. Now, I've only been talking about this for the past 5 years. You guys who were with us on the original workshops we used to do, the blockchain assets course and everything else, that's where this schematic came from. We co-wrote a book on this called Collaboration back in 2022. Right? The whole idea is, I know it's relatively small, but most of you have seen it. The whole idea is if you're employed, self-employed, on this absolute periphery, on the outer edge, and you've still got the mindset of, I don't really want to keep up with politics, I don't understand it, it's depressing, then you're going to stay out there. And that's okay. Stay out there. You've got two choices in life. Death by 1,000 cuts, by being blinkered and not taking any notice of what happens, either in macroeconomics or global politics. And ignorance is bliss, but death by 1,000 cuts means you're paying for that ignorance in devaluing purchasing power over a lifetime. That's the price of blissful ignorance. And that's okay. That's where most people live. Yeah. If I walk into the local pub here, or go through the local city, or even talking to friends and family who are in blissful ignorance, but then in the same breath complain, then you can imagine the conversation I'd like to have with them. I stopped having the conversation with them years ago, as it happens, because they don't want to come out of blissful ignorance. Yet they do want the better things in life. The alternative is you, as an individual, determine you're going to go closer and closer and closer to the center of this money supply. Now, back in the day, that meant for us hedging and speculating and taking chances on ownership of neutral assets with the probability of them maybe achieving higher degrees of price discovery more quickly as the fiat system fails. That's what it was back in the day. Now, it's front and center, absolutely the case that Bitcoin and physical gold are moving into all-time highs never seen before and will continue to do so for at least the next couple of decades, which is all we really need, right? But in order for us to live in that zone, that center of the money supply, we have to understand the repercussions of what's going on economically and politically. And the job of this call every week is to summarize that as best we can to give you the motivation, the guidance, and the sensibility of why you're doing what you're doing. Because we, of course, understand it's not easy, but it's easier together. So being in the center of the money supply is a choice, but it comes with it responsibility and consequence. So the center of the money supply in this particular round, we've discussed the macro already, is the political. And it's not a pleasurable place to be, because you're getting the information coming from the mainstream media and you're getting the information coming from specialists, and your job is to try and balance somewhere in the middle, just like we had to do when we were living through COVID, just like we had to do when we were looking at the fallout from 2008 financial crisis, just like many of us had to do when we were looking at the internet revolution and we bought in stock and we we're trying to figure out e-commerce, just like many of us you did if you're old enough, you went to 1987. Yeah, you've hit those markers in your financial existence, and you've either determined that you're going to do something to understand it and master the stallion. It's very much like taming a stallion. Or you've determined that you're just going to ride the nearest thing you can until the next catastrophe. And then it becomes mainstay on the mainstream media of the crisis, the crisis, the crisis. What we found over the years, if you do determine that you're going to take a sense check on macro and geopolitical posturing, then you come out of the other side of feeling down about it. You actually come out the other side of realizing the game that's being played. That's manifesting itself right now, for example, in the offset between arms races and hash races. Even the latest crisis to appear on our television screens, the Israel-Iraq war, as opposed to the Russian-Ukraine war, or whatever war is coming next, you start to be able to see through them and realize that what's actually going on, which comes back to everything we've discussed macro, is that these countries are posturing. Now, you're never going to get away from land grabs, religious wars, people not wanting other people living in their geography. You're never going to get away from the squabbles. But what we can ask for is an overall balancing, and that only comes from when you fix the money. All right, we saw it after the Second World War. Yeah, we saw it between the American Civil War and the First World War. You get these periods of time, and they're only relatively small periods of time because people are people. But we're going into another one of those times. It's called a fourth turning. All right. So if you know that, then you can be a little bit more buoyant in your posture about probabilities of life. And that's what we're looking at this next 5 to 10 years in our estimations, when you combine AI to what's going on with blockchain and sound money, to what's happening with the fourth turning, to how people are going to be a little bit more balanced. Because at the end of the day, when people feel more wealthy and ability to live, people are kinder, people are more tolerant. Yeah, but we're going to have to go through some pain to get there. The fact is, as I've said for the past few minutes, if you're already on the front foot of that with neutral assets, then you can afford to sit back to a certain degree and be vindicated in your decision making over the past decade. If you've not quite got where you want to be, you need to build towards that over this coming decade, and then get out there, in my opinion, as we've tried to do with DBM over the past 15 years, and get up there and try and tell these stories of the world so that people understand that actually there's more power in their control than they think. All right. Now that's manifesting in that hash race versus arm race. But what's really satisfying to see is you've got sovereign nations racing now to put themselves on a place whereby they have sound money in their treasuries, in their coffers, ahead of everything I've just said. So every week, we're finding more and more countries realize this. We had the El Salvador model. We worked on the El Salvador model for years. We understand totally what's going on with El Salvador, and we've watched El Salvador and we've seen what's gone on. Then we watched Argentina. Now we're watching places like Bhutan. Now we're watching places like Vietnam. And just this week, Paraguay and Nigeria and other smaller nations that they know it, they need to bring in this sound money, and ahead of time, while the rest of the world is still figuring it out, or the brinkmanship of the hegemony with the US and everything else is figuring itself out, they're doing it. It's also manifesting itself in the states of the USA. So Texas has already moved forward with it. A few other states have already done it, and Louisiana, just this week, have now announced they're creating what's necessary for them to take independence of the federation. Okay, so these are much more profound levels of understanding than simply buying Bitcoin and hoping the price goes up. Right? If you get this, then you start to realize the bigger play, and all you need to do is bring it all the way back down to your own house, your own home, and then your own street, and then your own village, and then your own town, and then your own city. Well, you're doing it faster. Many of you have already been doing this, so you're already on the front foot to be able to go and help somebody else, while the states, while the countries come on top. Yeah. And it all manifests itself at the very top, obviously, which is the hash race. So you see it from both ends, in other words. Okay. So you've got to watch this, whether you want to or not, and we'll do our best to summarize it every week anyway. So Trump, this is on a much, much detailed level. Trump last week reportedly looking to move Bessent in as the Fed president. Yeah. The leader of the Fed, which will be interesting. Who knows? I guess we'll see. It's all speculation. We'll come back to the Fed in a minute. The US Senate votes to move forward with the Stablecoin Genius Act. In fact, we expect this to be signed off this week. Remember what I said before about stablecoins? Okay, it's just a stepping stone. It's just a maneuver. It's the old people's home. As the real people come behind the scenes, right? With all due respect to old people's homes. Brazil announced their Bitcoin strategic reserve, going back to what I said before, Paraguay, yeah, El Salvador, India, etc. Passed by first committee, so it's going through process, but we're only in June of 2025. This wasn't even thought about at Christmas. Look how quickly it's happening. Trump's obviously feathering all sorts of things, his own family nest, what he needs to do to make sure he tiptoes his way through this, because he'll make or break himself basically at the back of this next 4 years. Be that broken because he's not able to get this stuff done. That's unlikely. It's very likely that even the Democrats are seeing the validity of everything I'm talking about today. So he's going to get this through, but he wants to make sure it happens. Okay. So he's last week, he put a public announcement out on the channels. Again, you won't see this on mainstream media, but if you look at the specialists on the channels, you'll see the video. It's up there on YouTube and other channels, working to create a clear and simple framework that allows America to dominate the future of crypto and Bitcoin. So everything I've been talking about, summarized. He knows it needs to happen, and so do some very clever people around him. He may not understand it fully, but people around him do. All right, and we've got to get this now past the Senate. We've got to get it into law, and the UK and the Europeans have got to catch up, which they will, of course. So Trump media, this is the family side of what he's trying to do. So he's putting his money where his mouth is, etc. 2.5 billion to Bitcoin. The SEC approved that last week. The SEC Commissioner Pierce confirmed that every bank now can offer Bitcoin. This is now legally possible, which has just been in a complete, epiphany. Can now offer Bitcoin services. That's what's leading to what's called hyper-Bitcoinization. So everything I've been talking about so far on steroids, again, because it will enter the retail markets without the retail markets necessarily understanding. The retail markets have never understood fiat currency. Most people in the retail industry, retail sector, think fiat is a car. Right? They just don't understand. They're not going to understand Bitcoin either, and that's okay. But the banks will do what they do, and the banks will be the middlemen, and the banks will take their fees, and the banks will do what the banks do. We know that's not the way it should be. That doesn't matter to us because we do it our way anyway. At the same time, we get the net benefit of a globally interconnected asset on a global balance sheet that we all benefit from, which is why Bitcoin is going to be pumping $200,000 by the end of this year. Finally, FOMC's meetings happening this week, big week this week. Okay, if we do get the break we want, that we're expecting, we may not see interest rate cuts in the UK, but we're expecting to see interest rate cuts in Japan, and most of all, we're expecting to see interest rate cuts in the US. Now, as and when that happens, whether it's this week or this month or next month, it's going to put a rocket ship at the back end of Bitcoin. So the M2 is one thing, but even just a sniff of a few basis points reduction in the interest rates in the US, Bitcoin will go. Now, if you're going to join us in part 2 of this call, when I show you how we put the CAGR on Bitcoin to create collateral that creates ongoing access to working capital that we then reallocate, if you're going to join us for that, you'll see how we ride up a Bitcoin from a 110 to a 150 and what we do in that time frame to create a more powerful P&L. That's what we're going to talk about in part 2 of this call, okay? If you want to be over there with us, then you need to be a system subscriber, at least a system subscriber. Get into this information, get into the hundreds of years of experience we've got at DBM to be able to guide people through this process, not just in what we've done, but what we do in real time, as I'll show you now, as we predict the next phases, knowing that history never repeats, but it always rhymes. Hopefully that was useful. We'll see you on the next call.